All yours.
Дякую. I'm going to share my screen, Наталю. Окей. Добрий вечір всім. Я дуже рада бути з вами сьогодні. Але відразу скажу, що з огляду на те, що ця презентація, ця сесія буде мати дуже багато технічних назв і так далі, ми переходимо на англійську. Якщо треба буде в кінці перекласти на українську, дуже радо ми це зробимо, але найлегшим способом провести цю лекцію це буде на англійській мові. We are here, I am here to help you understand everything about 501c3 organizations, our financial record keeping responsibilities, and what we need to do with respect to staying compliant to with the IRS. Thank you very much, Natalia, for the introduction. I am not a CPA. I want to say that up front. I'm not a CPA and I'm not a tax expert. I come from a Wall Street banking background, but after a market crash and after a bank takeover, I found myself in the nonprofit sector. And I have over 25 years of experience in accounting in the nonprofit sector. I do have a master's of accounting degree. I have had the great fortune of working with SUA since 2018, and I've also been doing the scholarship books since I think it's 2000. So let me go to the next screen, and what I hope that you will learn today is, of course, what is a 501c3 organization and why do we refer to it as such? What are the benefits of being a tax-exempt organization? How I want to very briefly touch upon how to establish and organize the organization, although if you're already an existing branch, you won't really need to know it, but possibly for the future, somebody who might want to establish a new branch, this might be helpful. I will also share with you what not to do in order to maintain your tax-exempt status. You don't want to jeopardize your status by doing these certain things. We'll talk about best practices in financial record keeping, and of course, IRS recording requirements. We'll touch on some state requirements, and then we'll finish off with donation acknowledgements and what kind of language needs to be in some of those acknowledgements that you send to your donors. Now, some of this many of you may already know. Some of you, this may be a refresher course. Some of you might have never heard of any of this information before. But anyway, I hope that you at least take away some little bit of knowledge by the end of this evening. So what is a 501c3 organization? We keep referring it to a 501c3. What does that actually mean? 501c3 refers to a special section in the U.S. Internal Revenue Code that describes a particular organization that is formed for charitable, religious, educational, scientific, literary, or other purposes that benefit the public interest or common good. So common examples of 501c3 organizations include churches, religious organizations, foundations, charities, educational institutions, museums, hospitals, and of course, an organization such as ours, the UNWLA. So what are the benefits of becoming a tax-exempt status? So we can look at it from the organizational point of view and from the donor's point of view. So being a tax-exempt organization means that that particular organization does not have to pay federal income tax on its eligible income. And this allows more of the funds to be directed towards the organization's mission. There are a couple of exceptions with respect to paying taxes, and there's something called the UBIT, or unrelated business income, that you would have to pay tax on. Basically, I'm almost positive that none of the branches or the home office have any of this. It's some sort of business income that is completely unrelated to your mission, that you would have to pay tax on. That's the organization side. From the donor side, donors can deduct contributions made to the 501c3. They can deduct it from their taxable income when they itemize their deductions. And what does this do? That encourages philanthropy and support of the organizations, So tax exempt status provides credibility and encourages individuals, corporations, and grant-making entities to contribute to the organization. Before I get into this, what I want to say, I'm going to go back to this tax exempt status with respect to donors. It's important that a donor consider a contribution, what is a tax deductible contribution. It has to go to a 501c3. If you give an individual a quote unquote, what you think is a donation, it is really not considered a donation, it is considered a gift, and therefore cannot be tax deductible on the donor's tax return. So any donation, in order to be considered tax deductible must be given to a 501c3 organization. As I mentioned before, since you are already established branches, you won't have to go through this very extensive procedure of establishing a 501c3, a nonprofit. But just very, very briefly, the steps entailed would be, of course, to hold an organizational meeting, to choose the legal structure, which might be different from state to state. You would have to draft articles of incorporation. You'd have to create bylaws. You'd have to elect your board of directors and establish roles and responsibilities. And then you would have to, in addition to obtaining your 501, your EIN number, you would have to file this very long, very cumbersome form called the 1023, which is the application for recognition of exemption. You don't have to do that because you are a branch of the parent organization, which means you are an extension of that parent organization. The only thing you will need is the EIN, or employee identification number, for banking purposes. What's really important for everyone to remember is that you must notify the national office of your EIN for newly established branches. The reason for that is because all of the branches fall under what is considered a group exemption. So the national has its own 501c3 with a group number, which means all of the branches benefit from the parent organization's 501c3 tax exempt status. If we don't know your EIN, if the national does not know your EIN number, you're not considered part of, you're not in the child relationship with the parent organization. And all of the branches must use their own EIN for all banking and reporting purposes. Under no circumstances should you ever use the national's EIN number. And we'll talk about that a little bit later as well. Moving on, again, I want to reiterate that branches are extensions of the parent organization. Sometimes it's called a subordinate organization, but most commonly it's a parent-child type of a relationship. So the home office is the parent, branches are the children, and because the branches fall under the 501c3 of the parent, they benefit from those same tax-exempt advantages. The branches share the mission of the parent organization, and the branches are in effect established to support the initiatives and the project of the parent. What you should never do to jeopardize your tax-exempt status, and first and foremost, is private inurement or private benefit. What does that mean? Basically, it means that no insider, whether it's a board member or a volunteer or an employee, should use the nonprofit's money or other assets for their own private use instead of the charitable purpose that they were intended for. So an example of something like that would be, okay, a nonprofit executive uses the organization's money to lease a luxury car or to have his kitchen remodeled or rent a vacation house at the beach, or even charge personal expenses on the organization's American Express card, for example. Another example could be a preferred contract is given to a relative of the member of a board member. So for example, a board member has a son who has a printing business, for example, and you're running a print job and you give this particular print job that may be
there's Nyasa,
a better
whatever,
price than you would normally find on in the market.
chicken.
What the other thing that nonprofits cannot do is participate in partisan political activity or intervene in political campaigns. Now, there's a myth out there that says that nonprofits can't lobby. Every charitable nonprofit can and should make its voice heard on issues that are important to its mission and to the people or the cause that the nonprofit serves. As advocates, nonprofits are required to speak up about policies, laws, and regulations. But we can't, as a nonprofit, engage in partisan political activities such as supporting or opposing any candidate for public office. Now, that's not to say, for example, that you can't have a politician come and speak at an event. You can, but they can speak in generalities. They can speak about the election system. They can speak about certain things, but they cannot push their own agenda. You as a nonprofit should not violate public policy. And what is public policy? It's a system of laws, regulations, court decisions, and general societal norms that citizens are expected to follow. If public policy is violated, it's probably something illegal or injurious to other citizens or is otherwise against the public good. The most important thing to jeopardize your tax-exempt status, if you do not file the IRS informational returns, known as the 990s, for 3 consecutive years, you will be put on a revoked list, and your tax-exempt status, your 501c3 status, will be revoked, whether you're a national office or a branch. This image here that you see is actually a snapshot or a screenshot of the revocations list that the IRS publishes. You can go to the IRS site and download it, and that's exactly what I did. It comes to you in a text file, and currently there are over 1 million organizations on that revocation list. You don't want to find yourself on there. And unfortunately, if you do a search on Ukrainian National Women's League, there are some branches that do show up on there, and that's probably because they were dissolved sometime in the past. Let's move on to financial record keeping. I'm sure all of you do this, and I'm sure you know what it is, but let's just review. So what is financial record keeping? It's basically the systematic tracking and organizing of financial transactions. So that's your donations, your revenue, your expenses, your bank accounts. Accurate records provide a clear picture of the organization's financial health and activities, and transparency builds trust among donors, supporters, and stakeholders. Maintaining accurate financial records is legally required for tax-exempt organizations. It helps to ensure compliance with the IRS, with IRS regulations and reporting. And of course, you need that information for your annual filing Form 990. But I think most importantly, accurate financial records provide timely information, financial information that empowers leaders to make informed decisions. Budgeting, planning, resource allocation become much more effective. And then, of course, we need to be transparent to our donors. And financial reporting, clear financial reporting demonstrates responsible use of funds to donors. And of course, positive donor relations are vital for sustained funding. So if we talk about best practices, we need to remember that bookkeeping needs to be consistent. And by that, I mean, you need to do the same thing month in and month out. And by that, that kind of, we can talk about expense categorization or even income categorization. So for expenses, for example, let's say you have a month over month expense for a software subscription, such as, a Zoom subscription. One month, if you record it as a software subscription, and the next month you record it as IT support, well, that's not consistent because you're going to get very different pictures at the end of the period about where things are recorded. So bookkeeping needs to be consistent. It needs to be, ins and outs need to be recorded consistently in the same categories. You need to reconcile your bank statements on a regular basis. And a regular basis is within 30 months of the close of the statement. Why do you need to do that on a regular basis? Because if you find some sort of fraud or some sort of unknown transaction on your either credit card statements or on your bank account statements, you have to get that resolved within a period of time that is acceptable to the banks. It's usually, I believe it's 60 days. You need to catch it as soon as you can so you can take appropriate action. We want to talk about documentation and keeping documentation. What does that mean? Invoices, receipts, donor information. So we need to talk about records retention, but not in this session. But you would keep your documentation based on your records retention policy. So invoices, receipts, things of that nature should be kept for several years. But what's important to remember is to keep donor records for up to 7 years. And why is it 7 years? Because the IRS has a right to come back to any person who pays taxes and audit their tax returns up to 7 years. So that's why any kind of donor records need to be kept by the nonprofit institution receiving the donation. It is important, especially if donations are over $5,000, because anybody who donates that large amount of money, it does get reported to the IRS on that Form 990 on Schedule B. And it's important to have their addresses. Now, none of that information is made public, but it is required by the IRS. So financial statements are the essential tools that we use to understand the organization's financial health and performance. What you see on this image is the actual CPA balance sheet for the years 2000 and 2001. So as I mentioned before, financial statements help leaders make informed decisions about resource allocation, expansion, growth, budgeting. If sharing accurate financial statements builds trust with donors, stakeholders, regulatory agencies. Financial statements provide insights to trends and areas requiring attention, assisting in future planning. And again, many funders and grantors require financial statements to ensure accountability and responsible use of funds. So the two statements that we most often talk about are the statement of financial position, otherwise known as the balance sheet. So the nomenclature between nonprofits and for-profits organization differ a little bit, and some of the presentation of the reports is a little bit different, but in essence, they're kind of the same. So here is the balance sheet or statement of financial position, and what is it? It's a snapshot of the organization's condition at a specific point of time. And it consists of three main components. We have assets up on the top presentation. I don't know if you can see my cursor, but assets are basically what the organization owns: cash, accounts receivable, investments, properties. The second part of the statement of financial position are the liabilities and net assets. Liabilities is what the organization owes to external parties. So that could be, an example could be a loan. It could be accounts payable. It could be your outstanding credit card um, um, balance, or some sort of deferred liability. And then you have what is called net assets, which in the for-profit world, if you're familiar with that, would be known as equity. And basically, it represents the value of the organization after liabilities. So assets must always equal liabilities plus net assets. Now, the one thing that's really very um, special for nonprofits is that net assets, or quote unquote equity, in this case is separated into net assets without donor restrictions and those with donor restrictions. So without donor restrictions is just your general donations. Somebody gives you $1,000 and says, do with it what you need to do with it to support your mission. With donor restrictions are those monies that come into things like endowment funds or memorial funds, or funds that have a use restriction to it. So, for example, the monies that were solicited, the donations that were solicited last year and this year for the medical support for the war effort, those have a use restriction on it, and that has to be reflected as such on financial statements. The next major statement or important statement that we look at is the statement of activities, as it is known in the nonprofit world, or the income statement or profit and loss statement. And what is that? It presents the organization's revenues, expenses, and resulting net income or net loss over a specific period. And that's usually a month or a quarter or a year. And again, this is an actual CPA from our annual report for the years 2000 with a comparison to 2001, with donor restrictions, without donor restrictions, what was donated in support. So you have revenues that come from general donations or contributions, membership dues, subscriptions. In this case, we had conference donations, and like the anniversary book, things like is included here. You have investment income, and then this is the portion where funds are released from endowments or memorial funds in order to be used to support the mission of the organization. Expenses. When we move down to expenses, they are typically on a nonprofit statement separated into program-related services and then supporting services, which are general and administrative. And the other part here that we don't show here is fundraising expenses. So with respect to UNWA, our programs are the scholarship program, the Nasze Życia, our life publication, our social welfare, and the education and cultural initiatives that we support. So those would be our expenses as far as programming expenses. And then you have supporting services, your general and administrative costs, and I'll talk about that in the next slide, I think. Or maybe in 2 slides. So just a quick on sources of revenue. Again, donations. I just wanted to touch on this because it's kind of important. Cash or cash equivalents. What does that mean? Cash, obviously, but nobody uses cash. Occasionally, we'll see some cash come in donations. Checks, credit cards, wires, ACH transactions. ACH stands for Automatic Clearinghouse. Those are bank-to-bank transactions. Things like Zelle, those kinds of things. And other electronic payments where funds are literally considered, those transactions are literally considered cash, is considered cash or cash equivalents. The other thing that we are not really good at doing, I have found, and many nonprofits are not good at doing that, is accounting for and keeping track of in-kind or non-cash donations. What are those? Those are goods or services. So for an example, somebody donated medical supplies, a carton of masks. They don't want any money for it. They just donate it. That's an in-kind donation. But we as a nonprofit organization should be keeping track of that donation. The quantity, the description, the condition, and we should be keeping an approximate value for our records. Although that is not reported on the IRS forms, on the annual 990s that are filed in May, the information should be recorded on financial statements. Another source of revenue are program fees. So what are program fees? For example, you hold a concert. That might be considered a program fee. Or you have, I don't know, you put on a lecture, or you have something where it's part of something that you do that earns your income. And then we have things like membership dues that could be considered a program fee. Although we are not, the UNWA hasn't had many grants in the past. We're learning how to work on those, I guess, and how to get some funding from foundations and other organizations. That's a source of income. And then, of course, there's interest, dividends, and capital gains if you're in the stock market as investment income. Here we go with expenditures. So I wanted to talk about the management and general expenses. So what goes into that? If you're renting a facility, renting office space, your rent, your utilities, your office supplies, technology, etc., things that you need in order to run your business. Now, what's included in here is also professional fees. Especially last year, I mean, most of you as branches would probably not have professional fees, but maybe some of the branches last year, because of the donations that came in, had to hire an accountant to help complete a Form 990 that you had to file. So that would go under professional fees. But the branch obligations to, the national or the regional council, that's part of your expenses. Any of the national's initiatives, whether it be culture, education, social welfare, those are your program expenses. Any fundraising expenses, again, you have a banquet, the cost of the banquet and anything that you print for it, or the meal costs, the alcohol costs, those are all included in your fundraising expenses. And then again, workshop related expenses are considered programming expenses. We're back to this same illustration about the branches. And I want to reiterate that, again, contributions are solicited locally at the branch level to support the fundraising initiatives of the national office. Fundraising must be open-ended, but it could be for a specific cause. So for example, you can't raise funds specifically for an individual or for a family of, let's say, Ivan Voyin, who was killed in the war, because that would be too specific. But you can raise funds for, let's say, the widows and families of fallen heroes. This is a very, very important distinction to kind of wrap your head around, and we're not all very good at doing that. The revenue that is raised by the branches should be directed to the home office or the national office to support the programs that the home office has vetted. So funds are dispersed to other nonprofit organizations that are vetted by the national office. Purchases are made through approved, vetted vendors. And again, disaster relief, if it is given to individuals. Those individuals must be identified by the national office. And if anybody is really interested in reading more about this, please see IRS publication 3833 that will go into a lot of detail about what you can and cannot do in terms of disaster relief. We move on to IRS reporting requirements. So you've heard me say a couple of times, refer to Form 990. This is a copy of the 2021 Form 990, the first page that was filed by the UNWLA with the IRS. So it's an informational form that most tax-exempt organizations must file annually. You say most because there are some categories of nonprofits that file different kinds of informational forms. It gives the IRS donors and grantors an overview of the organization's activities, governance, and detailed financial information. The 990 also includes a section for organizations to outline its accomplishments in the previous year, basically to justify its tax-exempt status. And in collecting this information, the IRS wants to ensure that organizations continue to qualify for tax exemption after the status is granted. And funders and donors regularly access publicly available 990s to determine if they want to contribute or partner with this particular nonprofit. So there are 3 different forms or versions of the Form 990 that nonprofits are required to file. Most of the branches, as far as I understand it, will fall into this first category and file a Form 990E. This was once called a postcard. Now it's called an e-postcard, but the official name is this 990E. It's an electronic, it is done solely electronically. It's a very simple form and requires minimal information, the name of the organization, the principal officer, your EIN number, and just basically a certification that gross receipts are less than $50,000. That's all. The next tier of 990 is the Form 990EZ. This requires a little bit more work and requires a little bit more information. And organizations, nonprofits whose gross receipts are between $50,000 and $200,000 and asset size is less than $500,000 are required to file the 990EZ. Anybody else who goes beyond this threshold, in other words, over $200,000 and assets over $500,000 or one or the other, has to file the Form 990. It's a very cumbersome form. There are lots of schedules. There are lots of check marks, that you have to answer about policies and governance, et cetera, et cetera. So if you are not familiar with filing these kinds of returns, even if it's just a 990E, I strongly suggest that you seek out assistance from an accountant who knows what they're doing with respect to nonprofits. And we have deadlines, of course. The deadline is 1 month after, if you're on a calendar year, which UNWA is, calendar years January to December versus a fiscal year that might end in the middle of the year, like a June 30. But it's the 15th day of the 5th month after the fiscal year end. So for everybody on a calendar year, that date is May 15th. However, if you are large enough that you are required to get an audit, you might need to file for an extension. Extensions used to be 3 months and then you had to refile, and now they've made it, past several years, it's been an automatic 6-month extension, but you do have to file a form. And in that case, the filing deadline would be November 15th. And again, I reiterate, if you do not file for 3 consecutive years, your exemption is revoked, and then you must reestablish your exempt status with the IRS. 990s are accessible. publicly accessible, and that is a requirement. So anybody can, any one of your members, any one of your donors can say, please show me your Form 990. Or they can even ask for your financial statements, and you would be obligated to show it to them. The IRS does make all of your 990s available on their own site. It's the IRS Charity Search. And this is the hyperlink here. And also GuideStar, or it's called Candid now. GuideStar has all of the 990s populated on their site as well. So let's take a look at what the Candid GuideStar search looks like. You have to go in there and create a free account in order to access anything, but this is the Nationals page, and you can search GuideStar either by the EIN number or by the name of the organization. So here you see that I did the search, and we came up with the national. You see that the ruling year, it might be a little difficult to see, it might be small, but the ruling year is 1967. That's when the IRS gave the UNWA its determination letter saying, yes, you are a 501c3 organization, yes, you have a group exemption, and yes, your donors can deduct their donations to you on their tax returns. There's contact information. This is what's wrong here. I don't know why it was established that way, but we're going to have to make an effort to change that. We're not just, obviously, our subject area is not printing. But our mission is clearly in capital letters on that very first page. And here on the right-hand side where it says tax forms, if you click on that show forms 990, you will indeed get 3 years worth of 990s that you can take a look at. So if you're a donor doing research, that's what you're going to do. Now, this is a page from the IRS tax exempt organization search. And here you can see that I did a search on Ukrainian National Women's League, the name, and I specifically put in New York. You can search by state. And what it does is it gives you all of the results. In this case, there were 23 branches, and with the EIN numbers on the left. It gives you the city in which it was established, or at least the city that was reported to the IRS on the group list. And then it'll, under this column that says database, you will see what kind of form that branch filed. So as you can see right straight down the line, it's Form 990N, which is that postcard. And look here, the second listing in Brooklyn, New York, auto revocation list. Same thing with the one second from the bottom, auto revocation list. So I don't know who these are, but as I said, they were probably old branches that got dissolved sometime way back when. Just to touch on state reporting requirements, each state is going to have its own specific requirements, and you need to check with your state attorney general or charities bureau. There's usually some sort of a filing fee with the state. There's no filing fee with the IRS, but the state usually has some sort of either nominal or not so nominal fee depending on your revenue and asset size. And just a word about sales tax and exempt purchases. Again, you have to go to your state tax bureau to obtain that certificate. They will probably want to see your 990. There's probably going to be a form that you're going to have to complete that may or may not require, articles of incorporation, things of that nature. So once you get that form, in New Jersey, it's called an ST5. In New York, it's a 119. I don't know what some of the other states are. And that's what you use. You should not be paying any kind of state tax on your purchases. The exceptions, however, are hotel occupancy taxes. You can't get around them in most states. You cannot get around alcohol beverage tax, and you can't get around all of those taxes you pay when you buy an airline ticket. That's just the reality. Okay, now we come to what our obligation is to the donor when they make a contribution. So there's a bunch of specific rules, things that the organization needs to do in order to have that contribution, in order for the donor to be able to take that contribution, make it take it off of their taxes when they itemize. Again, I said this before, that the donation must be given to a recognized 501c3, not an individual. The individual who gets a gift is a gift. It's not a charitable donation, and therefore the donor cannot take it off their taxes. The acknowledgement. The acknowledgement is a written receipt from the organization for contributions over 250. That's the rule of the IRS. However, the next slide, I will make an additional comment on that. And then itemizing deductions. So the taxpayer must itemize deductions on their tax return to claim the deduction for charitable contributions. Types of contributions. We talked about cash donations. So again, monetary contributions, checks, credit cards, ACH, wire, that's considered cash. And again, I'm reiterating the in-kind or non-cash contributions. Physical assets, property donations, so vehicles, real estate, valuable items. Generally, you should say no. If somebody offers you a car, say thank you very much, but no thank you. Real estate, same thing, unless somebody's really adamant about it. And then you really need to contact the national board to help you with that. Same thing with stocks and securities. So a donor can donate appreciated stocks or bonds, or take a distribution from a 401c3, 401k, or some sort of a pension plan or something, and transfer it directly to the nonprofit. Again, if somebody offers to do that, if somebody wants to donate appreciate stocks, please refer them to the national. You have to have a brokerage account in order to accept those kinds of donations. And then another in-kind donation are volunteer expenses. Certain out-of-pocket expenses incurred while volunteering for a nonprofit can be considered a contribution. So when it comes to donor acknowledgements, you should, even though the rule says 250, you should acknowledge all donations, no matter what the amount. Helena Trednichenko, our wonderful administrator at the Home Office, has seen donations for $1. I've seen donations for $1. So you have to kind of make a decision. Are you going to spend the number one time to write the letter? There's the cost of your time, there's the cost of the paper, there's the cost of the envelope, and there's the cost of the 60+ cent stamp that you're going to send out to acknowledge that $1 donation. Is it really worth it? So, you have to decide on a threshold, and I think that a threshold of $25 is what the UNWA has decided is the place where every donation that comes in should be acknowledged. So somebody once said that we believe that expressions of thanks are like pancakes. They need to be served right away. What does that mean? You want to acknowledge the donor as close to the receipt of the gift as possible. The language that the IRS uses is contemporaneous acknowledgement. And their definition says a donor must receive the acknowledgement by the earlier of the date on which the donor actually files his or her individual income tax return for the year of the contribution, or the due date, including extensions of the return. But having said that, no later than January 31st for donations made for the prior year. But again, there's absolutely no reason why acknowledgement shouldn't go out within a week at the utmost. Rule of thumb: paper in, paper out, electronic in, electronic out. What do I mean by that? Paper in your checks that come in, right? You want to acknowledge them with a handwritten letter. They sent it to you in an envelope with a stamp on it. You send them your acknowledgement with a, with a note, with a letter, with a signature, on an addressed envelope with a stamp. If it's an electronic contribution, by electronic contribution, I mean PayPal, Facebook, credit card, whatever. It is okay and acceptable with the IRS to send that donor an electronic acknowledgement. I mean, face it, some of the time sometimes we don't even have a physical address. Some of the PayPal contributions that come in only have an email address. They don't have a physical address. So the only way you can acknowledge them is with an email, and everybody should do that. Even if it's the dollar transaction, it'll only take you the 2 minutes to take the template that you already have set up, put in the name if you're not doing it, automatically, put in the name, put in the dollar amount, put in the date, and hit send. So what needs to be in that acknowledgement letter? So again, for the rule, but it should be for anything that you acknowledge, contemporaneous, within the year that the donation was made. Of course, some of these might seem self-evident, but it's worth reiterating. The name of the organization, put it on letterhead. The date of the contribution and the amount of the contribution absolutely needs to be in the letter. Now, remember, this is for cash donations only, or cash equivalent donations. Your acknowledgement to the donor must have a statement that says no goods or services were provided in return for the contribution. Or if there was something that you did give them, we'll talk about that in the next slide, or a description of and value if the goods or services were provided. The other thing that we need to provide in that letter is a statement that the organization is a 501c3 tax-exempt entity. There is an IRS publication number 1771, charitable contributions, if you want more information on the rules for acknowledgements. Now, here's the kind of exception. It's the token rule. So for any donation of over $75 or more, if the donor does receive something in exchange for the donation, you have to give them a written acknowledgement. So the $250 goes out the door. It's reduced to $75. So what is an example of that? The example is a gala banquet. Okay, so we're holding a gala banquet, and the cost of the ticket is $500. But in return, you get dinner. And the dinner is valued at $150. So your acknowledgement letter is going to say, thank you for your donation of $500, but you received a dinner that's valued at $150. So the only portion of your donation that is tax deductible is the difference between the two, which is the $350. Here's the token exception. The value, if you are doing something like giving them a mug or an umbrella or a tote bag or something that's considered a low-cost article or a token, and if that article, that object is worth less than $10.60, it is considered a token, and the entire donation can be considered tax deductible. So I just wanted to give you a very quick sample acknowledgement letter. Of course, the date of the notice, donor name and address. Dear donor, thank you for your donation of X amount of dollars received on this date. No goods or services were provided in exchange for your contribution. The UNWA is a 501c3 tax organization as defined by the IRS. Your contribution is tax deductible as allowed by the law, and you provide the EIN statement. Signature. I have seen tax law that there was a court case that somebody donated a very large dollar amount to a religious organization, and that person was audited, and the donation was denied, was declined. They weren't able to take it because the acknowledgement did not have a signature on it. So it doesn't hurt to affix a signature, a name of a real person and their title. An acknowledgement letter for the example with the banquet. We sincerely thank you for your $500 donation. The details of your donation are as follows. Donation amount, you list the total amount, the date of the donation, the description of the goods or services provided. You attended our recent fundraiser event on blah, blah, blah date. As part of the event, you enjoyed a delightful dinner. The estimated value of the dinner provided is $150. Your deductible contribution as per IRS guidelines is $350, which represents the amount of your donation minus the value of the goods or services, and then the same language here. Now, of course, this is just the absolute minimum that you need to put into your letters. You can expound on your thanks and say, please continue to support our mission, et cetera, and make it as flowery as you think you need to make it in order to express your gratitude to your donors and to encourage them to continue to support the initiatives of the UNWLA. Now, we talked again about in-kind, and we're returning to them. In-kind or non-cash acknowledgements. So this is, again, you need to, as the recipient organization, we keep a list of what we got, when we got it, how much of it we got, the condition it's in, and we keep our own estimate of the value. But the onus is on the donors. The donors must keep the record, and they estimate fair market value of the item that they donated. Okay. There are special rules for contributions over $5,000 that in certain instances include the need for obtaining a qualified appraiser. So that would be an example of that would be if somebody donated a piece of art that they thought was worth more than $5,000, you would need a qualified appraiser. And the donor may be required to complete a Form 8283, and the nonprofit, the recipient organization, may be required to acknowledge receipt of that donated property on this particular form. And then if it is sold, if the organization sells it, there's other information that needs to be reported to the IRS. The nonprofit cannot value the donation, nor can it provide a value in the acknowledgement letter, just a description of the item donated. I'll show you in the next slide what I mean by that. Cannot value time in the acknowledgement, only amount of time donated. That's another thing. So what do I mean by that? You have a member or a volunteer who is a lawyer, and they agree to do 5 hours of legal work in establishing a new branch. Or you have a CPA who is willing to do 10 hours of accounting consultation. They're donating their time. Your letter can only say, thank you very much for your 5 hours of your 5 legal hours or your 5 accounting hours. Even though that lawyer charges $500 an hour, you cannot say thank you for your time valued at $2,500. You cannot do that. The other thing that I didn't put on this slide, but what I want to mention, and I think it's really important, is that you should be tracking volunteer hours. Who are your volunteers? Obviously your volunteers, but it also includes board members, committee members, and other volunteers that do not provide a specialized skill, as I mentioned, the legal or the accounting. And why is this important? It's important because if you ever apply for a grant, the value of the time of volunteer hours of that in-kind donation can be used as a match for grants that require a match. So get this, the national average for a volunteer hour is $31.80. And that is per the independent sector research people. You can look that up. And what's included in that $31.80 on the national average is wages, employer taxes, and some fringes. In 2022, the New York hourly equivalent for a volunteer was $35.71. New Jersey, $33.82. Michigan, $30.15. Florida, $29.41. Pennsylvania, $29.78. So you might not do this now, you might think that, oh, we're never going to apply for a grant, but it will only help if you do, to even for your own benefit, to find out what time is really spent in supporting the mission of the UNWLA. Here's a copy of that. Here's a sample of that non-cash acknowledgement. Date of the notice, donor name and address. Dear donor, thank you for your donation of the following items received on such and such a date. 3 boxes of latex gloves, 3 boxes of surgical masks, 3 boxes of ibuprofen, or 5 hours of legal work in establishing a new branch. No goods or services, blah, blah, blah. And it's the same language there. Okay, so it's really, really important that you do that. And I think that brings me to the end of what I had for you. And we made it within the hour, I think. I would be happy to entertain any questions. There is my email, accounting@unwa.org. It's really easy to remember. If you have any questions, specific or general, I'll be happy to answer them for you. And if I can't answer them for you, I'll direct you to where you can get an answer. And that's my Google number. If you feel like reaching out or texting or whatever, you are more than welcome to do that as well. So thank you very much. And I'll stop sharing my screen now.
Наталю, дуже дякую. That was a huge amount of information, and the advantage is that we've recorded this session and we will make it available to everyone so people can watch it at their leisure and absorb all this important information slowly and thoughtfully. So with that, as we mentioned at the outset of the meeting, any questions can be put into chat, and Nadia Ninka has graciously agreed to help monitor the questions. So I'm going to turn it over to Nadia. If you could unmute yourself first.
There were a few questions. One is, what's the minimum number of people that are needed to start a branch? And the answer is 10. That's what I responded with. Another question, this one from Orisha Suraka, are branch balances rolled up to be included in the parent financial statements? And I believe the answer to that is no, not currently. Another question, can invitations be sent to all attendees?
We will share the video at this time.
Right, but rather than send to everyone, I believe what we're going to do is put it up on Google Drive, or perhaps even on the website, and people can access it that way.
Correct.
Another question.
Can I get back to the question about the financial of the branch balances rolling up into the financial statements? Mm-hmm. So the answer is no. And that is why you as branches file your individual postcards or your 990 EZs. That's why you have to do that. The Home Office has absolutely no plans to include all of the branches under their tax statement. That would be very, very difficult because of the number of branches, and it would be just very hard to manage and not to mention expensive. So that's why you file your own 990 postcards. And with respect to the number of people to start an organization, again, 10 is a large number. Usually organizations to establish a nonprofit or any business for that matter, if you need officers, it should be it should be an odd number. And as far as I know, the minimum is only 3. What the board, what the organization sets is up to them. But you need a president, you need a treasurer, and you need a secretary. Beyond that is up to the organization.
There was another question from Maria Samchuk. Hello, Mrs. Sancharenko. Thank you so much for sharing all of the with us. I have 2 questions. How can you check if the branch 501c3 has been reinstated? And the second question, what is the maximum amount of money that you can keep in your check or savings account before it becomes taxable?
Two very good questions. So, the way to check if your 501c3 has been reinstated is to go either to the IRS charity website that I showed you. You just go to the IRS, look for the charity search tool, and type in your EIN number. It should show up. Now, keep in mind, so I don't know when it was reinstated, but keep in mind there's a huge lag time with the IRS in getting things published and accessible publicly. The other search tool is GuideStar. One thing I neglected to mention, you need to make sure all of the branches should make sure that they are on those two websites, the IRS search and the GuideStar, because other organizations such as TechSoup, for example. TechSoup is a nonprofit that supports other nonprofits by providing heavily discounted either software or computer equipment. But they have even somebody like your Staples or your Home Depot, they have algorithms when you apply for a tax exempt account with that organization, for example, or with that merchant. Their computer systems have algorithms that go out and look at the IRS or the GuideStars to see if they can find your number and your name in there, and then everything goes smoothly. Same thing with Facebook and PayPal, they do those things. And if they don't find your number, then you have to jump through hoops in order to get anything done, which means providing, the 501c3 from the parent and writing letters, et cetera, et cetera. So yes, please do go check on the IRS site as well as GuideStar. Now, with respect to the question was maximum amount of money you can keep in your checking or savings account before it becomes taxable. That's an irrelevant question. The money that you keep in your organization's checking account or savings account or any other kind of investment account is not taxable. Yes, the banks will send you a 1098 or a 1099, at the end of the year, but they are not taxable. The income that you earn is reported as investment income on your 990s, on your financial statements, but they are not taxed. No income that the organization makes is taxed unless it is over $1,000 and unrelated to your mission. So an example of unrelated business income, UBIT, that we talked about, would be something like, okay, you had lots of property, and realize that I'm talking about other organizations, not necessarily the branches. Let's say you have a huge property, you have acreage, and you have a building, and you have a parking lot that you use on a daily basis for the people that work across the street, and you charge them, $10 a day to park. And you are SUA, right? We're an organization whose mission is to support Ukrainian women, culture, education, social welfare. We're not in the business of parking lots. We're not in the business of doing that. Any income that you would earn from that parking lot, for example, would be taxable income. It's considered unrelated business income tax. So the answer to your question about money in your accounts, again, is completely untaxable. You should not be paying any taxes at all, other than the ones I mentioned about, you're exempt from sales tax. You can't get around alcohol tax. You can't get around hotel occupancy tax. You can't get around airline taxes.
And can you repeat that again? That was a hotel occupancy, alpha. What was the third?
Airline taxes.
Airline.
I see that there's another question from Yulia. Can you confirm that donations in kind do not need to be reported 990? Yes, they are not reported on the 990. They are reported as footnotes on the financials. Correct.
So I have a question. As an example, our branch is going to be holding an event, and we're putting together a program booklet. And there are greetings that organizations and branches are sending, which we will be printing in the booklet. How do you treat that? Is that considered a donation for which you write a
Okay, so-
thank you?
So here's the thing. First of all, as the organization who is publishing that book, you do not sell it as advertisement. Advertisement is unrelated business income. Okay, you ask for a sponsorship. So you sponsor a page, or you sponsor a half a page, or you sponsor a quarter of a page. Then it is considered a donation.
Right. So I'm actually going to, I don't see any further questions. I'm going to stop the recording.